Good afternoon, everyone, and welcome to Stock Market Today for Tuesday, December 10th. It's Coram here, along with my colleague Ed Carson, and we've got a breakdown of the action in today's session where we saw growth stocks weak again today, Ed.
Yeah, one exception was Google, of course, but AppLovin was a loser again. Insulet is another positive player today.
Okay, well, we'll take a look at those stocks, but first, let's analyze the major indexes. The Nasdaq today down about 0.25%. The S&P 500 down 0.3% today. The Dow down a little bit more than that, about 0.4% or so, coming down to the 21-day line, and the Russell 2000 down almost 0.5% in today's session. Ed, what do you make of the action out there?
Yeah, the major indexes still look pretty good. I mean, they're all pretty close to highs. Once again, growth names, at least a lot of growth names, were under pressure, and so that's just something that investors who've been playing these really hot stocks, well, they've been a little burned the last couple of days. Now, usually in most cases, if they were buying right, they're still up a lot. But I think that's just something to be keeping in mind. Knowing where your stops are, what kind of pain threshold you have, what concentration levels you have, because stocks that ran up, if they've doubled, tripled, all of a sudden 10, 15% losses can look pretty big in your portfolio. So, but the indexes still look pretty good, in my opinion.
Yeah, they do. I mean, with the NASDAQ composite, we're still holding above the 10 and 21-day moving averages. So if this pullback continues here, so now we have 2 days down in a row, tried to rally today and could not. We'll have to see. If there's a test of the 21-day line or if there's a test of the prior highs from November, as we are not quite getting up to that round number of 20,000 on the upside. And for the S&P 500, it is now below its 10-day moving average. So Ed, it does look like next stop on the downside, if the selling continues, would be a couple of different levels that are converging. You have the highs from earlier in November, you have that round number of 6,000, and you have the 21-day line there as well. But as you said, it does appear that the indexes are masking some of the weakness underneath the surface. So how do you balance the two with the market outlook and the stock outlook?
I mean, we talk about, measuring the market rally's health by the major indexes and the leading stocks. And a lot of leading stocks still look pretty good, but a lot of the really, really hot ones have come under pressure. Some of the chip names are coming under pressure. So it's something to take note. That if those stocks are struggling, that's not the greatest. I will say one more thing on the Nasdaq is that the Nasdaq had been slightly extended. I don't want to. It was just getting to the point where it's like, well, if this goes any more, we might be in trouble. It's not extended now. I mean, it's so that is a positive. If we could pause for a while, maybe some of these stocks should, maybe some of the super hot ones need longer breaks, but there could be positives out of this. But yeah, but the Nasdaq no longer extended. The Dow and Russell are testing their 21-day lines, and so
Right.
those move up and down a fair amount. But it's just something to note. Again, 21-day lines not falling apart yet.
Right. And we put even more weight on those tests for the Nasdaq and the S&P 500, but still key levels to watch here. So we'll have to see if they can get some support there in balance or if they continue to fade. Okay, we also in terms of breadth, we like looking at the RSP, which was even weaker than the S&P 500. I guess, if you have stocks like Google and Microsoft and Apple that have kind of weathered this recent pullback better than a lot of other stocks. That makes sense. Ed, what do you make of this RSP here?
Yeah, Google and Tesla certainly helped overshadow. There were some big techs that struggled today, but there was definitely that big tech helped. RSP's come down. It did come off its worst levels, but it's just something to watch here. It's been sort of slipping down a little bit. Uh, I mean, RSP has these moments, but it hasn't had a real long stretch of outperformance in terms of relative strength, and it's slipping once again. And so that's below the 21-day line. It could go down to the 50. So it's not just tech and growth that's struggling. There are some other things that aren't the best going on out there. It's just, and again, these are just little yellow flags. Everything was going so well for so long. So fading off may feel like a lot worse, but it is fairly normal still. It could find support at the 50-day line and still be close to highs, but it's just something to watch.
Yeah. And Ed, I guess I was having you look at all of these charts from memory, but they are now showing. So our RSP here, not to backtrack too much, because I think traders who watch this show are very much in step with the action for the major indexes. But here, once again, the Nasdaq holding above its short-term moving averages. Same for the S&P 500, but getting closer to a test of the 21-day line, while the Dow and the Russell, as you mentioned, are testing the 21-day. Let's also take a look at FFTY because this is a good proxy for how growth stocks are doing. A really rough week here now taking shape, Ed, after a decline on Monday of 4.2%, down another 2.1% today.
Yeah, and you can't just pin it on one stock. Sometimes FFTY will get a big jump or a drop because there'll be one stock that goes up 30% or falls 30% and has this outright. That was not the case. I mean, there's some big movers, but you could look throughout the whole IBD 50, and these are many of the more extended stocks at this stage of a rally. They're coming under pressure. This tells you this is giving you a sense of how growth is really feeling right now. And for a lot of people who had portfolios that were moving up pretty rapidly, a lot of some probably are feeling this kind of pressure, especially if they're fully invested.
Absolutely. Okay, and then let's take a look at software. How's software doing? Down 1.5% today, adding to a decline of 2.1% on Monday. So far for the week, that is not a good look here with a downside reversal on Monday and adding to the declines here today for this hot sector.
Yeah, Oracle wasn't very good, and there were some other earnings that weren't positive. And we'll take a look at AppLovin, which is one of the hottest stocks this year, not having a good day. That's actually getting to be a notable component because of its huge run up this year. So yeah, there was definitely losers in this area.
Okay. And let's check in on chips. Here's SMH once again testing that longer term moving average, the 200-day line down 2.5% today. The selling wasn't as pronounced here on Monday, at least visually on the chart, still a decline of 1%. So now here too, another leading tech growthy sector under pressure and down at a longer term moving average, Ed.
Yeah, this is looking weaker. There's a couple names, and a lot of people know what those are that are still thriving. But the AI chips in general, they had a bad day today, and you're going to see some, and non-AI chips have been struggling for a while. So this is just not looking very good in general. It's hard to see a tech rally or even a market rally doing particularly well if the chips are not doing well. One, they're just such a huge component of the market by themselves, but everything uses them. So if chip demand in some way, it's sort of a proxy. It's just hard to see the market having a sustained run if chips can't participate. Now, obviously, we rallied, even though we haven't had a good November. We were rallying, but it's just hard to go up and up and up if that's going on.
Yeah. And we've talked about the overall weakness in the chip sector in recent months. I mean, look at that relative strength line on a downward tilt since July. As you mentioned, we have been talking about the winners or the leaders in this space. But Ed, I think that relative strength line weakening to the extent that it is, if we get an undercut or a sharp break of this 40-week line, I don't think that that would be a very good look here. It did pierce the 40-week line in September before a strong rally the following couple of weeks in September and into October. So it's not like if it closes below the 40-week line, that's it. But it is something that I think traders should be paying attention to.
Yeah, and when SMH fell below, the rest of the market was struggling. So if this breaks below the 200-day line again, can the rest of the market go?
Mm.
Yeah, I mean, there's some. We had Taiwan sales today, Broadcom earnings on Thursday. And so those are a couple of big names, and those also influence Nvidia, and not a good reaction today.
Yeah, definitely not. Okay, well, let's move on. There was there a notable bright spot in technology, and that was this breakout from Google parent Alphabet today. Ed shares up 5.6% above average volume, breaking out of a cup with handle base and getting to its highest levels since this summer. So, a strong breakout for this big tech giant today.
Yeah, nice move. A lot of it is because they announced this new quantum computing chip, Willow. Now that won't probably contribute to results in the very near future, but could potentially be like a real transformational thing out there. So that was really powerful. The volume was great. The relative strength line still well off its highs, but at least it's getting above short-term levels. So this
Mhm,
is an area. This is one it just sort of transformed. So it was not, it was lagging, so like, well, maybe it's on the edge. And it's like,
mhm.
sometimes one day can sort of transform how it is. So this one was viable. This was added to leaderboard. This was added to swing trader because, our IBD team saw the real change here.
Yeah. So getting above that 180 level, and I love how you pointed out the relative strength line clearing the handle highs. We're still a ways from those prior highs from June, July, but a notable pickup as of late after this stock, was on the ropes just a couple of weeks ago down at the 40 week.
Yeah, and one other thing, we talk about quantum computing, it's also Waymo with its robo-taxi, and I know they'll just I don't know how much that is influencing it. It is expanding out there, but just after the close, General Motors announced it is halting development of the robo-taxi. So Cruise has had its issues. That's out. A couple of years ago, Ford did, and so it's Google is the big player in the US. There's some others, and obviously Tesla has the push to go forward with. There's a lot of hopes for that, but Google seems to be the only real robo taxi in the very near future. So that's a positive for that as well.
Yeah, great color there, Ed. Okay, well, on the downside, very indicative of the struggles that high flying growth stocks are experiencing this week. Definitely AppLovin, a poster child for that. Full disclosure, I do own a position that I'm still up on. But Ed, I think investors have been spoiled this year, and especially in recent months with just jaw-dropping moves from some of these stocks. So whether or not traders have been able to catch some of them at the right time, that's another question. But it definitely is a change here after we saw a violation. And there is an art to drawing upper channel lines, but even on a short-term basis, Ed, APP hitting some resistance right around 400, clearing an upper channel line. David Ryan even previously saying that, hey, sometimes when a stock gets ants, that can be a topping signal. This time, it looks like maybe at least in the short term, it is at the stock down another 6.3% today, bringing so far in just two sessions the decline to 20%, but that's after a very, very large move here for the
Yeah, it
stock.
was
But
up 908% up through last Friday. I mean, just an amazing move, and most of that was just the last few months. Just jaw dropping, tremendous growth. There's a lot of reasons to be upbeat about it, and but yeah, I mean, it. I don't know if it actually touched it, but if it is, it's coming to the 21-day line for the first time in months.
yeah,
The 21-day line. I mean, just to touch that. So I don't think it even did. Even today, it
yeah,
didn't quite.
not
So it
quite.
hasn't done that, but it's basically the first test of the 21-day
Mhm.
line in a long time. Uh, it'll be a key area. I'm sure if this rebounds, people will say, "Oh, I bought," da, 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 and but it's also, so I mean, you can do that. I mean, you can do anything you want, but it's a pretty sharp drop. I think the
Yeah,
sharp
exactly.
drop and the high volume, is something to say. Well, maybe not a great time to be doing that. I think the 21-day line, and you might be able to speak to it, depends on where people bought it, but
Right.
some people might say, I'm going to take partial profits.
Yep.
And again, some people might have said, I'm going to take some partial profits when it broke the Apple channel line. I mean, that would be great if you could buy it still right at the top. But there's a reason why you do that because it's so hard to say, well, I'm going to miss out if you do that by selling up on the way, is that it's hard not to wait until it's down 20, 30% to
Yeah.
really sell. I guess if people bought around 300, there was that little shelf there.
Mhm.
I think people need to really be thinking about there because that went up from about 300 to say 420 or 4 whatever it got up to, and now has given up like 80% of that gain and or
Mhm.
something close to it. So, those investors want to make sure that they don't end up losing money on what was on that. But obviously if you bought it down near the 82 or the 90 level, you don't have to be doing it, but you do need to be thinking about, well, what is your game plan, how do you want to exit, because it also psychological depends on how your makeup. If you say like I'm going to sell it all at 275 and that's it, and you can stick with it, well, that's fine. But if you're the type, and maybe I'd be more like it, if I was a 275 and go like, man, I could have sold it at over 400. I'm just going to wait. And that's how you can do it. So you need to come up with sell rules on the upside or downside that protects yourself and that works for you.
Totally agree. Very well said, Ed. My cost basis is below 300. So yeah, I was late to the party. I'm still up on it, but I think that round number at 300, couldn't agree more. That is a level to watch. And even then, it does look like a different stock here with these heavy declines in increasing volume. So we'll have to see. Could be on the chopping block pretty soon here. And for traders who are faster, I do think that upper channel line, yesterday's decline, below the 10-day, and then if we have a close below the 21-day, those are all incremental levels that traders can opt to use. As for me, this has been such a strong year, so I wouldn't say I'm making riskier choices, but I'm trying to go for bigger gains and trying to give things more room. But I don't think that a good strategy is uh, being patient when you're down. It changes the game with being patient if you're up on something. So
Absolutely.
yeah. All right, Ed. Let's move on and take a look at PODD. This is Insulet in the medical products group. This was also added to leaderboard in Swing Trader today, and I could definitely see why with a gain of 3.7% above average volume as it bounced off of the 21-day line. Its first touch of that level since that positive reaction to earnings earlier in November.
Yeah, you almost treat this as like a mini base on base. It's probably on its way toward a base, or it could be if it doesn't break out. It's nothing over a shelf. Nice action here above short-term levels, tight trend lines, narrow trend lines, however you want to do it. There were signals there. Obviously, look, if you're going to play the market, especially when growth is under pressure, you and stocks are bouncing off 21-day lines and stuff, you have to be nimble. If you're going to be nimble going in, you have to be nimble coming out. So that's just the type of trader you have to be. That 21-day line certainly seems like a clear move below that or a close below that. That would seem like a clear signal to get out. You just have to make sure you're doing that because it could. I mean, shorter term bases, especially if the market's a little iffy in the very short term. But look, this is showing accelerating growth on the revenue side a little bit. Earnings growth is strong. It's just come along. It's been a nice performer. I mean, there's a stair steppers and there's stair steppers. This has stepped up and hasn't stepped back into the base. It was a stair stepper
Mhm.
that wouldn't have been hard to hold. Like if you bought that original breakout, oh, at least not the original, but back that one, really cleared there, and then it had another breakout, and you could hold. It would have been pretty easy to hold throughout that. I mean, you could have
Mhm.
used the 50-day or the 10-week line as well.
Right.
So this one might be another opportunity, certainly as an add-on, but as a new buy, there's not the overhead resistance is getting a little less. It's still some of that there,
Right.
so that's something to watch out for. But it's getting a little less intense. So a lot to like about this one. Um,
Mhm.
but it is, is this the right time? This is not a month or so or two ago when honestly riskier trades worked.
Right.
I mean, and I think we both have done some riskier trades that maybe we wouldn't do now. I mean,
Right.
just because there's riskier trades in a less risky market
Right.
is a different scenario.
Couldn't agree more, Ed. What do you make of the medical sector in general? Because it does seem like we've seen a rotation out of that. This stock clearly bucking that trend.
Yeah, it seems like medical devices have been less so. I mean, a few names, those haven't been hit in the medical device, medical products. It seems to be more the drug names have been hit, the insurers have been hit, some of the hospitals hit, but this seems to be one area that hasn't been. I don't know if that'll continue, uh, but that seems to have been an area that's been doing relatively well. And I can think of a few names like Intuitive Surgical is another name that's
Right.
been holding up, but so that's those are some things. But yeah, it's definitely not a broad-based medical rally like we saw, at various points in the year.
Mhm. All right, Ed. Well, thank you so much as always for the fantastic insights. Great to hear from you.
Great to have you.
All right. And thanks everyone for tuning in. Coming up at 5 p.m. Eastern, 2 p.m. Pacific is our weekly Swing Trader Status Update show live on YouTube. So stay on YouTube for that if that's where you're watching it. And of course, you can check out all of our videos at investors.com/videos. So we'll see you at 5 p.m. Eastern, and then the team will see you in the morning on IBD Live starting 10 minutes before the opening bell. Investors.com/IBD Live for all those details. We will see you then, and then we'll also see you right back here tomorrow after the close.